In this video, I'm going to show you how to maximize the S Corp tax saving strategy. I don't think anyone else out there is really talking about this, and it's pretty important, so make sure you pay attention because it can save you an additional 29% in Social Security and Medicare taxes. So that's 29% over and above the sort of regular way that you would use an S corporation to save money in taxes. And I'll explain what I mean by that here in a moment. But first, if it's your first time watching, let me just quickly introduce myself. My name is Navi Muraj. I'm a CPA that produces content all over social media to help you save thousands of dollars in taxes. So if you get value out of this, you learn something in this video, then please consider subscribing or following depending on what platform you may be watching on. So in order to explain this and the topic that I'm going to be talking about today, let me transition to my computer and share my screen with you. And if you're looking at this now, don't panic. I'm going to walk you through all of this. And so my goal is this. The subject of this video is how to maximize the S Corp tax saving strategy, right? So what I'm first going to do is walk you through what it's like to be taxed as a sole proprietor. So someone who's not taxed as an S corporation. Then what the S corporation is even all about. And if you use it in its traditional sense, how that it's very helpful. It can save you money in Social Security and Medicare taxes. But what I'm going to show you and teach you in this video is how you can save money above and beyond sort of the traditional sense, right? So what's that sort of secret sauce that I'm talking about here when I say it can save you almost, another 30% in taxes? And that's going to be incorporating health insurance premiums and HSA, that's health savings account contributions, into the S corporation, right? If you do this properly, you can save a lot more money in taxes. So let's jump into it. Let me explain what we've got going on here. At any point in time, if you get overwhelmed, just pause your video player and go back and review what I said. But what I want to show you is, let's say at this point, if you're watching this video, you've graduated beyond being an employee working for someone else, right? You now are running your own business. So in this situation, I've got a person here, let's say his name is John, and John's operating as a sole proprietorship. So he may have formed an LLC, but he's being taxed as a sole proprietorship still, or he may not form an entity at all, and so he's just out there doing his business, and he makes $100,000 in profit. Okay, so I'm saying he probably had revenues of, let's say, 120,000, and then to provide his service or to sell his product, he incurs costs of, let's say, 20 grand. So he lands at $100,000 of profit, right? 125 in revenue minus the 25,000 expenses, we land at $100,000 in profit. So what taxes does John have to pay as a sole proprietorship? Well, John's got to pay basically 3 or 4 types of tax. He's got to pay Social Security taxes, Medicare taxes, federal income tax on the 100 grand, and also if he lives in a state that has state income tax, he's got to pay state income taxes as well. So let's walk through it. $100,000 in profit times 12.4%. Where's the 12.4%? That is the employer and employee portion of Social Security, all right? It's 6.2 and 6.2, so that's 12.4. So he's got to pay about $12,400 in Social Security taxes. Medicare taxes, well, you can see the math there. It's the 100,000 times the 2.9%, because when you're a sole proprietor, you are acting as both the employer and employee, and what you pay is something referred to as self-employment taxes. And self-employment taxes, that's just another way of saying Social Security and Medicare taxes. So you could do the math on here. It's about $100,000 times the 15.3% is the total of these two items, which is $15,300, okay? In addition, let's talk about those other taxes I mentioned. He's got to pay federal income tax. So on 100 grand, let's say he's in what's called an effective tax rate of 15%. That means he has to pay $15,000 in income tax. And if he lives in a state, let's say like a Utah or something like that, that has sort of usually like a flat tax of about 5%, then he's going to pay 5% in state income tax, right? 100 grand times the 5% effective tax rate is the $5,000. So the total tax that John has to pay if he makes 100 grand in profit is $35,300. And you can see the breakdown there. That's $15,300 in Social Security and Medicare, $15,000 in federal income tax, and $5,000 in state income tax. If you live in a state that doesn't have state income tax, then just get rid of this entire row here. It doesn't apply to you, okay? Now, so why do people form S corporations. And by the way, you do that by typically forming an LLC or a corporation at the state level with your state. That's the state that you're doing business in. And then you elect to have that entity taxed as an S corporation. You make that election with the IRS. So what happens here in this scenario where John wises up, he forms an LLC, elects to have that LLC taxed as an S corporation. How much taxes does John have to pay in this scenario? So here, what's happening is John's still running his business, okay? And he is making 100 grand in profit, but he's splitting his profit into a salary bucket, if you will. That might be called reasonable compensation or officer compensation. And he's gonna also take the remaining profit in his business as a distribution. So that's what the 60,000 is here. It's the 40,000 in reasonable compensation and the 60,000 in a distribution. As you can see, what happens here is John is now sort of split into two. John's S Corp is going to pay Social Security and Medicare taxes, and John, the employee, is going to pay Social Security and Medicare taxes. But instead of paying it on the full 100 grand, like in the sole proprietorship situation, he's only going to pay it on the $40,000 of reasonable compensation that he has determined is reasonable for him, okay? And so how much tax does he have to pay between Social Security and Medicare taxes? Well, it's only $6,120. If you add up these four numbers, you get $6,120, okay? He still pays federal income tax and state income tax. I want to drive that point home a moment here. If you notice across these rows, regardless, you're still paying federal and state income tax. The S corporation strategy is all about saving money in Social Security and Medicare taxes. So as you can see here, how much tax did he save? Well, he's no longer paying $15,300. He's paying that $6,120. So it's about $9,000 in tax savings, all right? What is his percentage tax savings over being a sole proprietorship? Well, it's 26%. He's paying 26% less in taxes than if he was a sole proprietor. All right. Now, the topic of this video, how do you maximize the S Corp tax saving strategy? Well, in this scenario, I'm saying that John pays for his own medical insurance. Okay. So he doesn't have a spouse that has medical insurance and he's not on that plan. I'm saying John or his spouse pays for health insurance right out of his pocket, okay? He pays for it. And so I'm just gonna use what I think is a reasonable number here, $10,000 a year in health insurance premiums. I think the math on that works out to a little over $800 a month. In addition, he's gonna use a health savings account to save more money in federal and usually state income tax as well. Okay, so he's gonna maximize his HSA contributions. So he's gonna contribute $7,300. Well, what happens when you do that? Well, if you do this and you do it properly, then you're still gonna pay yourself the reasonable compensation of $40,000, but you're gonna integrate the health insurance premiums and HSA contributions into the strategy. So you'll actually only pay Social Security and Medicare taxes on the $22,700. Where am I getting this number? It's the $40,000 minus the $10,000 in annual health insurance premiums and minus the $7,300 in HSA contributions. That's where the 22.7 is coming in. So what happens in this situation? John's actually only going to pay Social Security and Medicare taxes on $22,700 times the 6.2 and the 1.5, like I showed you before. So John's S Corp, because the employer, John's S Corp, is going to pay that amount, and John, the employee, is going to pay the other half. So what's the total of these four numbers? Is right here. It's $3,473.10. Okay, that's how much Social Security and Medicare taxes he's going to pay now. Again, the federal and state income tax are not changed by this, okay? Actually, to be honest with you, because you have the HSA, you would pay a little bit less in federal and state income tax. But I want to make sure we're doing an apples to apples comparison here. So how much is the S Corp saving John now? Well, it's saving him $11,826.90. What is that as a percentage of tax savings over being a sole proprietorship? Now that's 34%, okay? And then what is it as a percentage of tax savings over if he just does these sort of regular S Corp strategy, well, it's an additional 29% in tax savings over the regular sort of S Corp strategy. Okay, so that's where I'm showing you where, you know, that's great. You have an S Corp. That's awesome. It's going to save you a ton of money. As we saw here, $9,000 in Social Security and Medicare tax. But make sure if you've got your own health insurance and you've got an HSA that you're going to contribute to, then make sure you know how to properly incorporate the those items, the health insurance premiums and the HSA contributions, into your payroll as the officer of the company to save this additional 29%, okay? So listen, we covered a lot in this short video. I don't expect you to be able to navigate all of this on your own just by watching this one video, right? I recommend that you take some time and watch some of the other videos that I've touched on, or some of the other concepts that I've touched on in this video. You can find those videos on my website or on my YouTube channel. Some of them that I would recommend you watch is 4 Reasons Not to Be Taxed as an S Corporation. Make sure you watch that before just jumping into and deciding that you want to be an S Corp. I also created a video called Why Social Security Sucks. What I mean by that is like, hey, if you're a sole proprietor and you want to pay $15,000 into Social Security and Medicare taxes, that's great. But just keep in mind, you know, when it's time to collect, you're not going to collect much. And also too, when you pass away, you don't leave any money to your heirs. All right. If you have children, you want to leave some money to them. You wouldn't do that by contributing to Social Security and then you pass. That's it. The money's gone. But if you take that same tax savings, the $11,000, almost $12,000 in tax savings here, and you contribute to, let's say, a solo 401k or retirement account for yourself, then that money's going to grow even more so than it would if you were contributing to Social Security. So your benefit would be a much larger, and you could actually pass that wealth, create wealth, and pass it on to the next sort of generation. All right. I would also recommend watching a video called When to Form Your LLC and When to Have it Taxed as an S Corporation. Those are just some of the videos that I've produced that expand on this topic. All right. Or I guess lastly, I'll leave you with, if you really want to learn how to not just learn the strategies, but implement the strategies, you may want to go to my website and check out the course that I created for you. I don't just teach these concepts, but I actually teach you how to implement the concept. Let me just show you my website real quick. I'll pull it up. It's navimoradcpa.com. Here, again, besides the course, there's other tools and resources, where to form an LLC and have it taxed as an S Corp for completely free. You can check out these companies. You can schedule a Q&A session with me if you have questions. But the course is here. You can click on it. It'll load this page and you can just see how much content is in this course, how detailed it is. It teaches you bookkeeping, accounting, taxes, all the various strategies, how to implement, and you can see them: hiring your children, meals, travel, healthcare premiums is what the topic of this video is, right? Business gifts and other strategies for you to implement in your business. All right, so check it out. It'll pay for itself many times over. I believe the tax savings in this video that I taught you is an additional around $2,800. That's way more than the cost of the course. So check it out if you're interested. With that said, I'll wrap up and say thanks so much for watching, and I'll see you in the next video.